Hello, my name is Steve Bigelow with the Candlestick Forum. There's some very obvious sectors working this week with the market trend still staying above the T line. You can see how the Dow came right back up to the resistance level. If it starts trading positive, there's another high probability of a next stage to the upside, wave one, wave two, wave three, and that is still being evidenced over here in the NASDAQ. The fact that when they broke out of this little wedge formation, the uptrend remains in progress. So once again, as long as the indexes continue to trade above the T line, you want to stay predominantly long, but still have a few short positions in the portfolio. An often asked question is which patterns, which signals are the best? And the answer is we've already narrowed down the multiple signals and patterns to the ones that are the best. It's a matter of what the market conditions are. Right now, the J-hook patterns are working extremely well. So if you see a J-hook pattern in one of these sectors that are acting strong, the oil stocks, there's dozens of oil stocks working well. Information providers and shipping stocks are acting well. So the oil stocks, as you can see, like in Apache, there's your J-hook pattern with added evidence that it's supported right here at the 200 after breaking through. This adds more strength to that next prospect of a wave three, the same magnitude as wave one, because everybody is watching to see whether the 200 was going to act as support. And when it did and formed our J-hook pattern, that was that much more evidence and confidence of investors staying in this position or buying this position because of this support. Same thing over here in Occidental Petroleum. This is what we call the classic pattern. A fry pan bottom followed by a J-hook pattern. And once again, notice where the buying started. Right here on the 200, back up through the T line, broke out into new territory. The probabilities are that wave three is going to be the same magnitude as wave one. We saw that in the biotechs last week. And we're seeing it in the information providers this week. This is VERI, VERI. Look at your fry pan bottom, big spike up, consolidation. Now the J-hook pattern. This one should be bought on positive trading on Monday. And the shipping stocks. You can see Fro did a best friend gap up in kind of this trend channel, making the next likely target up here to the 200-day moving average. The advantage we have for recognizing the different signals and patterns is it allows us not only to be making money in an uptrend, but all boats are going to rise in a rising tide. We have the ability using candlestick analysis to find which boats are going to rise a heck of a lot faster than the rest of them. Last week, it was telecommunications because they broke out of fry pan bottoms as we saw in IDT. It's still moving nicely. So as long as these bullish patterns stay above the T line, you can stay long. If we see the Dow open positive tomorrow, pre-market futures showing strength, there's a good probability that we're in the next move. Whether you want to call it a Santa Claus rally or not, it doesn't matter. It's going to make the bullish trades work. That'll be it. We'll see you in the chat rooms.